so much for joining us here at SuperInvestor.
Thank you for having me.
There's obviously been a lot of talk about the environment we're in.
Yeah.
How do you approach it as an LP, and what are you looking for in your partnerships that's different in this sort of environment?
Yeah, so obviously we have had 10, 12 years of an amazing bull market, and times are getting really tough now. It's looking recessionary. We all know the macro issues. So what I'm really looking for with managers now is those that are cycle tested, that have really seen this before, and not even just the GFC, because I think the GFC there was a lot of rescue money around, whereas it feels a bit harder this time. So I'm really looking for managers that also have operational capabilities and expertise, because things will go wrong, and I think you just need to be able to roll your sleeves up and really get in there and help portfolio companies.
So not necessarily falling back on prior relationships, looking for new people, but with those qualities?
I'd say a bit of both, because we definitely have managers like that in the portfolio, but equally there are more untested managers, I guess, where you'd have to think very carefully about re-upping to. And I'm also thinking quite carefully about the credit side of things as well, because obviously that market has really picked up and it's very complementary to what we're doing in our private equity portfolio, just with a bit more of an income focus. But it feels like it's going to be a good time for sort of maybe the more distressed type investors who can really just get to grips with companies that maybe some of the growthy, techie managers haven't really had to experience that so well.
You obviously are having a lot of approaches at the moment as well. You've touched on that. You've talked in the past about how you cope with that.
Yeah.
What do you do to manage it when there's a lot of people coming to try and talk to you?
Sure, yeah, and I think I made this comment on stage earlier that my inbox seems to just explode every day. And it's very much, private equity is a relationship business, so I don't want to be rude and not get back to people, but sometimes I just genuinely can't speak to everybody. So I try and keep it quite brief, but I suppose for me, I'm lucky. I've done this for a long time. I've got decent pattern recognition, so I can look at things reasonably quickly and work out if that might be a fit or not. But it's also trying to be encouraging to people who are maybe newer managers or emerging managers, and to give them a little bit of airspace, because we all deserve a chance, and these are, the stars of the future. So trying to have a balance between the two, really, sort of existing and new.
But at the same time, I guess having high expectations of what those people come to you with, they've got to have done their homework and have that level of respect for what you're doing.
It's true, actually, and I think some managers are very good at sort of thinking about what the coal schemes need. We're big mature pension schemes. We're very interested in managers that are operationally focused. We're very interested in managers that can really adapt to the environment as we're going into it. I think it's just, there's so much deal flow coming in, picking through that is hard. And I think it's also hard for managers. They're trying to raise capital. It's a very difficult environment now. So I do appreciate that they won't necessarily have had a chance to do a lot of due diligence on us at this point, but to really just try and all understand each other, and we're all trying to make good investments together. But I just think times are tough right now.
And all the time, that's got to fit in with your wider portfolio.
Yeah.
What do you want good to look like in your portfolio at the moment?
Well, I'd love to say very high returns and very high cash flows. And obviously you have to be cognizant that might not be the case right now. Where it fits within the wider portfolio, I look after credit strategies and other liquid strategies. So from private equity, I'm still looking for something that's going to create alpha and the higher returns. From my credit portfolio, that's where I can get more of the income component. So I think that's fine. Every asset class has its job to do. But for us, it's just really balancing those and sticking with the right managers, those that really can still generate those high returns. And I think we've had far too benign an environment in the last few years, and there'll be a lot of, what's the phrase, when the water goes down, you'll see who's wearing their swimming trunks. I think we might have an element of that in the next couple of years.
So you talk there about the managers. Is that a sort of a slight change in strategy and structure, if you like, in that you'll stick with perhaps fewer managers, but who are more diversified potentially?
Yeah, it's certainly something we've been giving a lot of thought to in the last couple of years, just because the manager roster has gotten so broad, because it's a mature program. And how you can manage that sensibly and actually get the best out of the relationships in both ways. So for example, we've been thinking about managers that have maybe a mid-market strategy plus a larger market strategy. Maybe there is a credit strategy or a real estate. Just broader platforms, but it's got to work. I mean, it's still got to be best-in-class strategies within that platform, and there are plenty of great managers that can do that.
Within all that, you did touch on it in an answer a second ago, but ESG is obviously on everybody's top of their list. So what are you looking for in that area at the moment, and how important is that?
It's very important. So we try to invest thematically, and climate is one of our themes. We're looking at that across asset classes though, so it's not just within private equity. So we have that in the infrastructure portfolio, for example, where renewable infrastructure is it's a more established asset class. In private equity, you're seeing an abundance of great looking funds that are coming through. Have to look at those quite carefully because track records aren't as well established. We invested with a hydrogen fund last year, which was maybe a more unusual investment for us to make, but it's something that we felt really quite strongly about, and that hydrogen is a very growing sector. But equally, it's hard to make that argument around the IC table when there's maybe not a big track record to go off. So a little bit of a leap of faith, but certainly, climate's very important.
You've worked in this industry for a long time, and you've seen it change in lots of ways. Have you seen it change enough in terms of having more women around the table?
It's definitely improved. Looking around at the conference today, there's an awful lot of people here and a lot more women, which is just fantastic to see. I remember going to conferences more than 20 years ago, and I'd be one of a handful of women there, and you really stuck out like a sore thumb, whereas now it's just maybe not 50-50 sadly, but it feels like a better balance.
Why is that important?
It's just diversity of thinking. I've been speaking to several GPs today and asking all of them, so, what about gender diversity in your team? I'm looking at the senior team, there are no female faces, for example. But I think the message is getting through, and a lot more GPs are being more broad-minded in their hiring processes and having to look outside of the traditional schools that they might have gone to previously. So it's a great time for women to be getting into the industry and progressing. I think there's just a lot more support for us.
So a slightly changing face to that crowd. There are a lot of people here at this conference this week. If they were to take away one message from having had a chat to you this week, what would you hope it would be?
I think what I would hope to be able to tell people is that it's a much more diverse industry these days, both from a gender and an ethnicity perspective. But it's also broader in terms of, like we were saying, climate strategies in one hand. We're seeing different areas in tech being explored. Basically, private equity has become so ubiquitous, it really stretches across all areas you can think of. And I think that's rather wonderful, because back in the day it was a very niche asset class, not really very well understood. I think we still have issues in making the asset class better understood, especially in the media. But I think it's great that the message is now getting out there that private equity does good as well. It's not the locusts that we had 15 years ago. It really is job creation, supporting companies. And I think that's all helped by having a much more diversified investor base and GP base.
A great message to end on. Thank you so much for talking to us. Great to see you.